He had the RV picked out. His wife was ready. 35 years of work, $40 million sale. It was time to retire. And then the phone rang. 3 years later, he'd only collected $19 million and he was back running the business. And he never took that RV trip. So if you're planning to sell your business, make sure that you watch on for what happened to him and what you need to avoid. Hey everyone, I'm Chris McClure and I've been doing this for 31 years. I specialize in working with business owners and successful families that have accumulated significant wealth. One of the things I've learned over this last 30 years or so, and maybe you're one of these folks, is that business owners will do almost anything to help the person buying the company succeed, even when it costs them everything. So this is a story about one of those situations. And if you're thinking about an exit, you really need to hear this. So this guy, Tom, he was my client for 10 years before any of this happened. He owned a manufacturing company. He built it over 35 years. He had 80 employees. He had a solid business. And you know what? He was successful and he was happy. Maybe it's like you. And we had worked on his estate planning, his investment planning, his tax planning. We worked on all of it. He ran the business. His wife ran the books. They were a really solid team. His wife, Margaret, had been talking about retirement for years. Does that sound familiar? She wanted to retire. He wanted to keep working. But at age 62, Tom got an offer for $40 million for the business. Tom was super excited. He couldn't have been happier because he had the plan. He had a plan that we had worked on. He wanted to buy a luxury RV and he wanted to travel the United States for a year or two with his wife. He wanted to spend time with the grandkids. He wanted to enjoy all the things that he had built, all that time he had spent building his business, all those extra hours and all that blood, sweat, and tears. He wanted to cash out and he wanted to enjoy it. So maybe you have a similar dream. It's that thing that you're going to do when you finally sell. Like I said, Tom was ready to sell and he was expecting $40 million. The buyer wanted to structure the deal with $10 million down and then $3 million a year for 10 years. And Tom really loved this idea. He loved it for three reasons. First, he loved it for taxes. It was spreading it out and potentially kept him in a lower tax bracket. Second, he thought it'd help the buyer succeed. They'd have cash flow to pay him. And third, he liked the idea of this guaranteed $3 million a year. It was like a pension, a big pension for 10 years. So I'm on the phone with him after reading the offer. And I said, Tom, I think we should take more up front. What happens if something happens to that business? What if they can't pay you? So I suggested $25 million now, and then maybe $15 million over 5 years or so, something like that. And Tom, he trusted me and we'd worked together for 10 years, like I mentioned, but he wanted to do it his way. He says, you know what? They're solid. These guys have backing and the tax thing, it just makes sense. So no, if you're in the same situation, you're thinking about selling, maybe you're thinking about the exact same thing Tom did. And his other advisors, his CPA and his attorney, they all fell in line. His wife and kids trusted him because he built such a successful business. So that's what they did. They took it over 10 years. Year one was great. He got $10 million. He's feeling great. You'd probably be feeling great too. Year two, he got $3 million. We're on schedule. We're looking good. Year three, $3 million. Middle of year four, Tom calls me and I can hear it immediately. He sounds angry. He sounds nervous, upset, pissed off. And he says, they want to delay the payments 6 months. They're having cash flow issues. He wanted to know if he'd be okay if they delayed it. So we ran some models, just like we always had. And yeah, of course he'd be okay. He'd receive enough money that he'd be fine. He had received around $19 million, $10 million in the first year, and then $3 million over the next 3 years. So he had $19 million bucks. But that meant that he was giving up on $21 million, potentially. He was frustrated. He was resigned. I told him, if it doesn't work out, you still have plenty of money. I didn't want to kick him while he was down. And so if you're in Tom's shoes right now, what would you be feeling? 6 months later, Tom calls me again. This time it's bankruptcy. And he was ready to cry. I think he was actually crying. He was obviously really upset and he didn't want to go back into the business, but he couldn't just leave $21 million on the sidelines. That would be hard. So he bought the assets back. And he had to go back to work at age 66. And the fact is, he thought he was done. He thought he'd be traveling around in his RV with his kids and his grandkids. So he actually recruited his kids back into the business and they came in to help. He tried to structure it so he could be a part-time, advisor, more of a CEO role. But the business, it just kept pulling him back in. A few years later, I took Tom out golfing And he said, I should have taken more up front. I shouldn't have relied on them to pay me back. He was tired. He was a little defeated, but he was okay. The kids were taking over, which was exciting for him, right? He enjoyed having his kids in the business. That actually was pretty cool. But then he said something that stuck with me. He says, I never really got to do that whole RV thing. I haven't played much golf lately either. I'm just too busy. And so he worked another 4 years after buying it back. So in that 10 years, if you remember, there was a 10-year plan. 7 of those 8 years, he thought he'd be retired. Unfortunately, he was back in the business. The question that you want to ask yourself as a business owner is, what is the structure of the deal? How could I make this work for me? Tom's happy now. He's traveling more. The sons are running the company. Tom's more like a chairman. He consults, he gives advice. And actually, he did a better job of giving up control than most of my clients do. But you can tell he's a little bitter, right? Bitter about $21 million. And he's sad that he missed those years because he's still in the business. What I've noticed with business owners like you, or any business owner for that matter, is it's not just a job. It's actually who you are. It's who we are. It's your whole identity. It's a lifestyle. And I felt like Tom had finally gotten his new identity. He was going to be an RV guy. He was going to be a grandpa, a golfer, whatever he wanted. And then he had to step back in. Tom told me all of this, the RV, the golf, how he was feeling. And the reason he told me all this on an emotional level is because we had worked together for 10 years. We talked about more than just money. We took a look at everything with our clients, especially with Tom. We looked at his tax return, his estate plan, his trust documents, his investments, insurance, buy-sell agreements, all of it. We also had conversations about what he actually wanted his life to look like, not just the numbers, not just his stocks, bonds, and mutual funds like most advisors. So if you're thinking about selling your business, here's what I'd ask. Are you structuring your deal based on what's best for you? Or are you doing it to help the buyer, or maybe for tax efficiency, or because it looks good on paper? Tom made a bet. He made a bet that the people he didn't control could provide that $21 million and that they would be competent for the next 10 years. And unfortunately, he lost. And more than the money he lost those years he wanted to spend with his wife and his grandkids in the RV. And so the question is, what's your RV? What are you going to miss if we get this wrong? If you're facing a business sale in the next 2 to 5 years, I encourage you to sign up for an appointment. Just click on the link below and we can have a 20 or 30-minute chat. I really, really love making these videos. If you enjoy them, please subscribe or leave a comment, and I'll see you on the next one.